Good afternoon, everyone. On behalf of the Spanish Chamber of Commerce, we welcome you to the webinar Building Sustainable Wealth Through Spanish Real Estate Market, Legal and Tax Perspective. This session will be recorded. We appreciate if you can turn off your cameras and your microphones. Now we give the word to Shahab Soltani from the Alta Moderna.
Thank you very much for the introduction, Christina. Good afternoon, everyone, and a warm welcome to today's webinar, Building Sustainable Wealth Through Spanish Real Estate. And give me 1 second, let me share my screen with you. Before we dive into today's topic, I want to thank the Chamber of Commerce of Spain in Qatar for holding this event and for their ongoing efforts to build bridges between Spain and the GCC region. It's truly an honor to be with all of you today. Today's session is divided into two parts. I'll begin by giving you an in-depth look at the Spanish property market, especially here in Costa del Sol, why it's so attractive right now, where the real opportunities are, and how investors like you can build sustainable wealth here. And then I'll hand things over to Carmela de Andres Camazon, one of Spain's leading real estate lawyers, from our partner firm Martinez Echevarria, who will guide you through the legal and tax aspects of investing, an absolutely crucial part of the process. Let's start with the big question: why Spain? Why is it one of the most attractive real estate markets in the world today? Well, there are many reasons, but we'll break it down into a few points. First, Spain offers economical and political stability. As a part of the European Union, it provides its investors with a secure legal framework, strong property rights, and a transparent ownership system, all of which are essential for building long-term wealth. As an example, just last month, it was featured in the World Economy Forum as the fastest growing economy in Europe. And second point I could mention is the lifestyle and the quality of life. Spain isn't just a place where you invest, it's a place where people want to live, where we're talking about world-class healthcare, excellent infrastructure, top international schools, cultures, and so much more. And of course, some of the most beautiful coastlines in Europe. It also experienced considerable capital appreciation throughout the recent years. Past year, over 11% year on year for major cities we have experienced over here in Spain. And finally, and more importantly, foreign investor confidence is booming over the past few years. Foreign investment in Spanish real estate has increased steadily. Even during global uncertainties, Spain has remained a safe haven for capital, and also it basically just changes demography, but the demand is always constant by foreign investors. Now let's talk some numbers. The market outlook for Spain is also very strong. Property prices are forecasted to rise by 6 to 7% this year by the end of the year. This is the stats given by Idealista and also CaixaBank Research, some of the reputable data providers here in Spain. And also mortgage rates, very important. They remain historically low, averaging at around 2.8 to 3%, one of the lowest in Europe at the moment. Further to that, infrastructural investment by the government and also into renewable energy has been very successful and has reached new points as Spain has surpassed over 60% of generation of energy through renewable energy, which is a big landmark. And because of population growth and foreign demand, which continues, they're hitting new records. And when you combine low financing costs, rising demand, and limited supply, it's always a recipe for capital growth. And remember, property is one of the few asset classes where you can leverage your investment with a mortgage and amplify returns. As you can see, I've included some of the headlines, recent headlines, and we have even the Costa del Sol has also attracted big names like Modern Holding from Emirates to invest in the La Zagaleta Golf Resort. And why Costa del Sol? Let's zoom into the region where Alta Moderna operates. Costa del Sol is Spain. If Spain is a great investment destination, Costa del Sol would be the crown jewel. It stretches from Malaga to Marbella and Stepona and well, Soto Grande as well. And Costa del Sol would be one of the most vibrant and in-demand property markets right now in the world. And why? It would be because of more than 320 days of sunshine a year, attracting over 14 million tourists, which was last year, and we expect it to be over 15 million this year. Home to some of the greatest golf resorts and beaches in the world. And also, Malaga Airport is now connected to over 120 destinations, making it easy for holidaymakers as well as second residents to get here. And this year, basically, in comparing to last year, fourth quarter of 2024, Andalusia has experienced the biggest year-on-year increase in the capital growth by 13.4%. Just reviewing some of the investment strategies that our investors over here follow. One of the most popular offline investments, which feature very flexible payment plans and value appreciation upon delivery, and you have perfect quality home basically, and it has great yield potential as well. Fix and flip for more savvy investors. Turnarounds are 6 to 8 months, so you might be able to even do 2 a year if you're very savvy and very energetic. Due diligence is very important, and in this way, we have lower entry points. And well, a highly popular one would be rental property investments, which have high yields and definitely require a reliable property management team, or else it would not be producing the high yield. And a recent change into Spanish laws is that short-term rentals do require tourist licenses in most areas, and that's something that you need to check with your agent or with your lawyer to make sure that you will get what you are required. And we also have real estate investment trusts, or as they are called over here in Spain, societies, which are suitable for institutional investors and family offices, and is an in-depth topic that we can cover in another session. Now, let's talk more about new developments. Investing in off-plan or newly built properties has several major advantages, and that's what makes them very attractive. You can offer secure, flexible payment terms. Typically, it's 30% during the construction, and you only pay the rest of the 70% upon delivery, which also allows you to obtain a mortgage for the rest of the payment at that time. And they all offer 10-year building warranty, which mandate. It covers different areas of the property, and they all feature premium quality amenities such as co-working spaces, gyms, smart home tech, and such. In addition to having a much better energy rating, which will now become very important in Europe, as soon we will have mandates, I think, in the coming years, which will limit the properties which have lower energy ratings from being able to rent it out. And yes, it's an insider secret, I could say, that new developments are often where investors achieve the highest returns because they're getting in before the market fully prices in the value. And this is a great capital appreciation when they are delivered the property and taking into consideration that they started with 30%. And also general investment tips, which are basically very global, but I would say more related to the market over here than others. Market research always is important. You need to research where and with what amenities, what location you're looking for. And it is very important in Spain to find out the location that you desire and you feel comfortable with. And if it is for investment, then it would be more of the touristic areas or more the areas with the better regimes of the city. At the same time, understanding your financing options would really also affect your yield down the road. And working with an experienced real estate agent is very important, as the system in Spain does have a lot of hurdles, but with the right person, you'll be able to navigate through them with no problem, as well as due diligence and legal considerations, which are very important in every transaction and should be handled by a professional legal team. Now, just to give you as an example, some of the case studies that we have had in the past few years with some of our clients, just to give you a broad overview. Obviously, the numbers are rounded as to protect the privacy of our clients, but they are fairly accurate. And as you can see, a new build apartment in Estepona, which was purchased for 600,000, generates gross rental income of around 45K a year. And these are all thanks to, as well, to our property management, which is generating over 95% occupancy for our clients. And if in general you reach that occupancy, these numbers are easy to achieve, which could mean a gross yield of 7.5% and net yield of around 5.5%. And if you imagine with 70% financing, this would be around 8 to even 11% cash on cash, which is very good value. And also an example of a villa, which was in Marbella East in Elviria, to be precise, at a purchase price of 1.2 million, which is impossible right now to find in that region because the prices has gone up so much. But that one easily generates a gross rental income of over 100K and a gross yield of 6.1, which would be a leverage return of 10 to 13. And new build apartments in Mijas, which has a lower price point and also good tourist attraction because it is fairly closer to the airport and a lot of golf resorts around it. We have had a gross yield of around 7.9 and a net yield of just over 6% with similar cash on cash values. At Alta Moderna, our mission is to make property investments simple, secure, and profitable. We handle every stage of the process for our clients, from property search and due diligence to negotiation, financing, and banking introduction through our banking partners, which are the top financial institutions in Spain. And we handle full property and rental management, as well as long-term portfolio strategy. Whether you're a high net worth individual, investor, try diversifying your portfolio, or a family looking for a second home and income stream, our tailored approaches will fit every client portfolio. If you're ready to take the next steps, we'll be happy to talk to you. Do contact us. Visit our website where you'll be able to see a large selection of our portfolio. It will give you an idea about who we are, what we do, and what are our availability in our current portfolio. And if you feel like you're ready to proceed, get in touch with us for a personalized consultation with one of our advisors, and we'll be happy to dig deep further with you and make this dream come true. By scanning the QR, you'll be able to access our WhatsApp directly and message us for all your needs. Thank you very much for your attention today. And with that, I'll hand over the floor to Carmelo.
Thank you very much, Saad, for your presentation. And naturally, thank you very much for the Chamber of Commerce of Spain in Qatar for having us, having Martinez Echevarria lawyers explaining and share with you certain legal and tax implications related to the acquisition of a property in Spain. I'm sharing my presentation. Probably my presentation is not so fancy as the presentation. My presentation is more a lawyer presentation, and I will try to explain,
more important.
hopefully with a certain degree of success, the main tax implications of acquiring a property in Spain, which at the end of the day are relevant matters to consider when you are pondering an eventual investment in a different country with all of the technicalities and particular implications that taxation by itself usually has. And when I'm talking about the acquisition of a property in Spain, I like to explain it as a sort of cycle of life, as such, of living beings, let's say. And this is important to take into consideration, since in Spain the acquisition process of a real estate asset is a very defined one. Unlike other countries, for example, in the United Kingdom, the process to acquire a property has a very defined phases to which you need to implement across the whole path. The acquisition of the property starts with the offering. The offering is the launching moment in which a person makes an offer, basically with regard to the price and the main conditions of the transaction, in order to acquire a real estate asset. This offer is relevant because it establishes the framework. It establishes the main rules to be applied within the framework of the relevant transaction. After that, the execution of the transfer itself takes place, which the granting of the public deed before a notary public. After that, the acquisition phase finishes and start the process of exploiting the asset or enjoyment of the asset. This second step finishes with the future transfer of the asset and its subsequent sale or transfer by means of donation or inheritance. As you are aware, all of these steps have a certain tax implications, and all of them need to be carefully considered when you are pondering the acquisition of the asset. Firstly, and I'm talking now on the tax implications. The acquisition of an asset in Spain can trigger indirect taxes. That indirect taxes are mainly depending on the nature of the asset to be transferred. When the asset is transferred by a businessman or a business company and is allocated into a business activity, the transfer of the asset could be potentially subject to the value-added tax. Also, when an asset is transferred for first time, it means that it's a new building, an off-plan or a refurbished asset. Also, VAT applies. With regard to residential assets, which is the main topic of this presentation, the applicable tax rate is 10%, and also stamp duties are triggered along with this VAT. In the case of Andalusia, since stamp duties are regional regulated taxes, the current enforced tax rate is 1.2%. On the other hand, when the asset to be transferred does not comply with the requirements or the nature described within the framework of the value-added tax, the transfer tax is triggered. Transfer tax is also a regional tax. It means that in this case, the tax rate, applicable tax rate, depends on the autonomous region in which the property is located. And in the case of Andalusia, the tax rate, applicable tax rate is 7%. Why this acquisition phase is important, not just solely related to the fact that we need to determine the indirect taxation of the transaction, but also, as Saab has mentioned in his presentation, because during this first acquisition phase of the transaction, the due diligence process is conducted, is carried out. During this due diligence process, a full due diligence analysis is conducted on the property title, the charge that are that at some stage can levy the property, urban planning, and of course taxation. Also, during this initial step, during this due diligence process, is the moment in which the negotiation on the financing options is launched with the different banking institutions in order to apply for a mortgage or a similar kind of loan in order to be applicable on the acquisition of the asset. In all of this process, always the assistance of a lawyer is highly recommended, but not just the mere assistance of a lawyer, but also other kind of technicians are usually involved in this process, essentially architects or urban planning experts that can take part in the due diligence process. Also, and I'm referring now to the holding and exploitation of the asset. The ownership of an asset in Spain implies also certain tax implications, but it depends essentially on the destiny, on the purpose of the acquisition and how this asset is used and effectively or not rented out to a third party. I'm referring now in taxation for non-residents, since I guess that could be the topic for reference for this presentation. But also it has certain changes, certain special rules with regard to residents for tax purposes in Spain. When the asset is acquired and the purpose of the acquisition is its rental, it's exploited and obtain a rental income, the taxable base of the non-resident income tax, which applies to this rental income, is the gross amount obtained as a result of the leasing activity. That say, European Union and European Economic Area tax residents might deduct certain expenses from this gross amount. So it means that in the case of European Union and European Economic Area tax residents, the taxable base is, at the end of the day, the net rental income. Those expenses deductible are those which are effectively borne within the framework of the rental activity. In the case of non-European Union and non-European Economic Area tax residents, according to the Spanish law, there is no possibility to deduct expenses. That say, a very recent judgment of the Spanish National Court, la Audiencia Nacional Española, has accepted for first time the deduction of expenses by tax residents in third countries. So let's say which is the future of this decision, but now a new door is open for those tax residents in third countries which are renting properties in Spanish territory. The applicable tax rate is 19% in the case of European Union and European Economic Area tax residents, and 24% in other cases. In this non-resident income tax, the applicable rules are the same, irrespective of the fact that the taxpayer is a natural person or a legal person, provided that both of them are non-residents for tax purposes in Spanish territory. On the other hand, I have explained the taxation on the rental income in Spain. The mere disposal of a property that is kept at the disposal of the owner entails also certain tax implications. In order to avoid technicalities, there is a specific rule applicable and established in the non-resident income tax law, which establishes the amount of that deemed real estate income, which is a sort of presumption, a potential income that you will be obtaining in the market if the property is effectively rented out. For sure, the amount is not the same. The amount that you are obtaining in the market is usually much higher than that resulting from this estimate. Applicable tax rates are the same. It's important to take into consideration that this presumption of real estate income is just applicable to individuals. It does not apply to legal entities. In the case of legal entities, when they are the owners of a real estate asset located in Spanish territory, the so-called related party transaction rules and transfer pricing rules apply to the relation and the disposal, the enjoyment of the corporate asset by the shareholder of the company. Other taxes to be considered within the framework of the ownership of a real estate asset in Spain are the net wealth tax, which is a tax also regulated at some points by the autonomous regions. For example, in Andalusia, this net wealth tax does not apply when the value of the Spanish assets is lower than 3.7 million euros. So the threshold and the safe harbor is good for considering potential investments in real estate assets in Spain. The real estate tax, which is similar to the non-resident income tax under the modality of deemed real estate income. This is a municipal tax, and the garbage collection tax, which is a tax that the municipalities levied on the taxpayer and the taxpayers for the services rendered within the municipality, essentially the garbage collection. Once you have acquired the property and have maintained the ownership of the property, the third step, the future transfer of the asset. This transfer could be executed basically by means of two different ways. One of them is the transfer for consideration. You are transferring the asset as an investment in exchange for a price, or the transfer of the asset by means of inheritance or donation. It's important that all of this is analyzed and pondered at the time of the acquisition, because many times investors do not planify properly the inheritance, eventual donation of assets, or the transfer of the real estate. So for this reason, when the acquisition is conducted, it's important also take a look at the future in order to prevent eventual unforeseeable situations and try to limit the tax impact of the decisions conducted with regard to this sort of investments. Essentially, when you are transferring an asset in Spain, the non-resident income tax is triggered on the capital gain obtained as a result of the transaction of the transfer of the property. And the amount of this capital gain is the difference between the acquisition value and the transfer value. Applicable tax rate is 19%. It is respective of the tax residency of the taxpayer, and it applies in both situations, when you are transferring for consideration and when you are transferring by means of a donation. Along with this non-resident income tax, there is an additional tax, which is the tax on the increase of value of urban land, which is a municipal tax depending on the cadastral value of the property and the number of years of ownership. Important to take into consideration that here in Spain, the inheritance and gift tax depends also on the regulations and provisions passed by the autonomous regions. Andalusia, which is the autonomous region where the La Costa del Sol is located, has bonified the inheritance and donations executed between parents and children. So at the end of the day, the taxation with regard to the transfer of assets, properties located in Andalusia for non-resident individuals has certain tax benefits that ultimately make this potential investment as a very attractive one in order to limit the impact of a future inheritance of the assets of the estate of the parents by the children. A usual question when investors come to Spain and ask for this potential acquisition of real estate assets is if, apart from the possibility of acquiring the real estate directly by themselves as individuals or by means of a foreign company, the possibility of incorporate a Spanish company in order to conduct and channel the investment. In Spain, the usual formula is the Spanish limited liability company due to the cost and expenses related to its maintenance. And essentially, it gives certain tax benefits, certain tax possibilities that are not directly applicable many times to individuals. Essentially, the possibility of deducting expenses from the gross income obtained in the case of a rental activity on the assets. That said, it's important to remind that it's highly advisable that these Spanish limited liability companies has economic substance. It implies that in order to conduct this kind of investments in real estate assets, the Spanish company has enough economic resources, material resources, personal resources to complete successfully the business purposes, the business driver, which in this case is holding real estate assets. Why? Because in other case, the incorporation of the Spanish company can be just understood as a mere tax saving solution. And for this reason, it's important that the company effectively carries out a business activity, being a mere asset holding company without any kind of material and personal resources. There are certain corporate obligations with regard to the maintenance of a Spanish limited liability company, and also this structure by means of a Spanish limited liability company gives the investor different possibilities with regard to the divestment. Essentially, the possibility of execute the transfer of the future transfer of the asset by means of a share deal. It means transferring the shareholding in the Spanish company, or by means of an asset deal, which is I maintain the Spanish company and I transfer the asset directly as a corporate asset. With regard to the specific position of Qatar, Qatar is a non-European Union and non-European Economic Area country, that's logical, and for this reason, the applicable tax rates and the applicable taxation rules are those explained with regard to non-resident individuals in these areas. So 24% tax rate, deemed real estate income also 24%, and capital gains 19%. It's important to remind that between Spain and Qatar, there is a double taxation treaty in force. So the provisions of this tax treaty can be applicable at some stage in order to limit the impact of double taxation, which at the end of the day is very beneficial for prospective investors. The option of the Spanish limited liability company is always in place. So when Qatari tax residents are pondering the acquisition of real estate assets in Spain, they can consider the possibility of conduct the investment by means of a Spanish company. A different point is with regard to dividends and interest, which is not directly related to this presentation, but also in case of financing the Spanish companies or obtaining and transferring the profits obtained directly from the real estate activity in cases of a Spanish limited liability company, the dividends and interest might benefit from reduced withholding tax under the treaty. This is my presentation. Also, I want to mention a couple of points. Taking the presentation that Saab has made. One of them is the possibility of structure the real estate investment in Spain by family offices by means of REITs, the Real Estate Investment Trust in Spain, the SOCIMIs. This is a very suitable option when the amount of the investment is relevant. Because this SOCIMIS has certain tax benefits. Essentially, the applicable tax rate, subject to the completion of certain requirements, is potentially 0%. So it's a very powerful tool in order to channel the investment in real estate assets in Spain, and it's good to ponder it in cases of relevant and significant investments in Spanish territory. On the other hand, which is not directly related to real estate taxation, but is many times a common question between investors, is the potential transfer also of the tax residency to Spanish territory. In Spain, we have certain tax regimes, essentially the impatriates tax regime, which gives the applicant certain tax benefits in comparison with the general tax regime applicable under the personal income tax, which is the tax applicable to individuals residents for tax purposes in Spain. Under this impatriates tax regime, which is also known as the Beckham law, essentially the taxpayers are subject for their salaries as a Spanish source of income. Other income obtained, which is not a Spanish source of income, is not directly taxed in Spanish territory. So also lower tax rates applies to this impatriate. So it's a very good way to in order to plan the future transfer of the tax residency to Spanish territory, and a powerful way to structure investment and international movements of people. Once again, thank you all for your time, for having us here. For sure, we are at your entire disposal for any kind of question, comment, suggestions that you might have with regard to the points that we have explained. We are aware that it's a lot of information, so and even more when you are dealing with tax matters, legal matters, which many times are not easy to be understood. But hopefully these presentations proves useful for your purpose. And please, any kind of question, let us know, and we will be more than happy to answer it.
Okay, thank you so much, Shahab and Carmelo, with all this information. Now we will start the Q&A session. If someone have any question, please just raise your hand, or you can also write your question in the chat. Just give them a couple minutes.
While we're waiting, I'm gonna again elaborate on some of the points that Carmelo mentioned. They're very important. Well, he is very knowledgeable about tax, and he explains all of it in details. It shows that they are while they are complicated, with the right lawyer and the right law firm, with the right expert beside you, you can navigate and find out the right solution for yourself at every point, depending on the amount of investment, depending on your targets. When you consult with the experts in the field, then you'll be able to make the right decision and find the right path, which would allow you to basically generate wealth and to reduce all the costs that are associated with it on the side.
Okay, thank you so much, Shahab. Now we have one question, I think so, from Rocio, right? Because
yes,
you turn your
hello.
camera on. Okay, you can do other question.
How are you? I just would like to ask regarding the golden visa, if it's still applicable, if it's valid, if you invest, if I have a client, can you hear me? Hello?
Yes, we can hear
Yes,
you.
yes.
Can you hear me?
Yes.
Yes.
I just wanted to know if spending 500,000 euro, you get the golden visa for an expat, for an investor.
Yeah, the golden visa was removed by the Spanish government during last year, so there is it does not remain in force. So this option that was also usually the most common way to apply for a resident permit in Spanish territory, essentially for investors, is not in place anymore. I don't know in the future if it could be reintroduced, implemented again, but now there is no possibility to apply for the benefits of the golden visa. That say, there is, or better say, there are other mechanisms to obtain a visa in Spain. There is no solely the golden visa, but digital nomad visa remains in force. Non-lucrative visa also remains in force, and also there are certain visas, not the golden visa itself, but other difference thinking on the position of investors. So there are other ways to be explored. The point of the golden visa was that a very easy way to obtain a residence permit, because it was just focused on the amount of the investment. But now with different requirements and different conditions, the possibility of obtaining a residence permit in Spain could also be applied.
So doesn't matter whatever you invest, the amount you invest, you don't get any type of privilege visa, like a Schengen visa or anything like that.
With regard to the investment, no. There are
Understand.
other visas subject to other requirements, but a visa which the main requirement was an investment of a certain amount does not exist currently in Spain.
Okay, thank you.
Very
That's
welcome.
all. Thank you. Thank you.
And if I'm
Thank
correct,
you so
Carmelo, this was
much.
a trend also that came from other countries of EU. Am I correct? This was a trend that Spain followed from other countries which stopped a similar program of investment to residency.
That's correct. That's correct. Other way is gain a kind of, or if you have a nationality in other European Union country, and as in Spain, in the European Union, the free movement of people applies, is other way to enter into Spanish territory.
Okay, now we have another question in the chat. This question is from Samar. Samar asked about Portugal still has the golden visa?
I'm not a Portuguese lawyer. I can check it because we have offices in also in Portugal, and I can revert with the answer. But I'm not an expert in Portuguese legislation, so I cannot answer that point. But for sure, we can get back with the answer after consultation.
Okay, thank you so much. At the moment, I think so that we don't have any more questions. Okay, if you have another question, you can contact us, and also you can contact directly to Alta Moderna. They will be so happy to answer your questions. For now, we can conclude the webinar. Thank you so much to all the attendees. Also, special thanks to Alta Moderna for this collaboration, to Shahab Soltani, and to Carmelo de Andres Camazon, because this value information was so important for us. As we informed from the beginning, this session was recorded, and we will post the recording in our social media in case if you want to watch again. Thank you so much to everyone, and I hope to do another collaboration soon.
Thank you very much.
With you guys.
Thank you very much.
You're welcome.
Pleasure.
You're welcome.
Bye.
Bye.